What's up everyone, it's Scotty with Money Investing. So welcome on board to the last day of the week, and of course it is the second Friday of the month, and we got the jobs numbers. So markets are higher, but a huge miss for the jobs. So September jobs report badly misses expectations, with payrolls increasing by just 194,000 jobs. And this right here were the actual numbers. So we got 194,000. The consensus was 475,000 to as high as 500,000. Unemployment rate, however, still dipped down to 4.8%. The unemployment rate consensus was 5.1%. Prior, we were sitting at roughly 5.2%. So big drop in unemployment rate, but the number of jobs that we added was only 194,000. Participation rate 61.6%, 10 basis points lower than the consensus estimate and 10 basis points lower than the prior month as well. This is primarily being regarded as due to the Delta variant and the pandemic still ongoing. And of course, that is one of the biggest reasons. And then there's also reports that there's more and more people retiring. And as a result, the participation rate is still lower right now. Then we got the average hourly earnings year over year unchanged at 4.6%, and average work week also increased slightly to 34.8 hours versus 34.7 the prior. That was the consensus, and 34.7 that was the prior work week as well. So the U.S. economy created jobs at a much slower than expected pace in September. A pessimistic sign about the state of the economy, though the total was held back substantially by a sharp drop in government employment. Non-farm payrolls rose by just 194,000 in the month compared to the Dow Jones estimate of 500,000. The Labor Department reported Friday, and the unemployment rate fell to 4.8%, better than expected, about 5.1%, and the lowest since February 2020. So definitely, this is the lowest that we're seeing since the pandemic started. And the headline number was hurt by 123,000 decline in government payrolls, while private payrolls increased 317,000. The report comes at a critical time for the economy, with recent data showing a mixed bag of solid consumer spending despite rising prices. So this was a very unusual report. This is a little bit of a confusing report just in general. And the Federal Reserve officials are watching the jobs number closely. The central bank recently has indicated it's ready to start pulling back on some of the extraordinary help. So that's going to be the bond buying program, the asset purchases that they've been doing of plus roughly over $120 billion. We'll talk about that in more detail. However, officials have said they see the jobs market still well short of full employment, a prerequisite for interest rate hikes. Market pricing currently indicates the first rate increase is likely will come in November of 2022. So this right here is the unemployment rate coming down to a very, very low level since the pandemic started. So, back when the pandemic started, we were roughly at 4.2, 4.5%, and then we spiked all the way to north of 14, 15%. And this right here is now down to 4.8% as of September 2021. This right here was a huge government job reduction of 123,000, 125,000 jobs roughly. But again, leisure hospitality adding the most number of jobs here, followed by professional business services, and we got retail, trade, transportation, warehousing. So there's definitely a lot of supply for labor in those sectors, but some other sectors still struggling to find workers, like mining and lodging. We got construction, we got manufacturing, wholesale trade, then we got utilities actually seeing a decline here, financial activities seeing a little bit of a modest increase, and education health services also coming down. With this right here, other services also pulling back here in the prior month. So average hourly earnings, we still have $30.85 in total private payroll. That's the average hourly earnings. Some of the sectors do actually pay a lot. Utilities up to as high as $45 an hour. Then we got this right here is going to be financial activities at $40 an hour. We got this small over here, mining and logging. So anything that you see that is short in supply is obviously paying a lot in average hourly earnings versus sectors that have a lot of supply for labor, such as retail, trade, warehousing, transportation. We got professional business services, leisure, hospitality. Those sectors are all the way down here. They're paying a lot less compared with some of the other sectors, right? So they're paying anything between $15 and $25 an hour. And this right here is going to be professional and business services to as high as $35 to $37 an hour, roughly. That's going to be this green circle right there. So overall, I'd say the big debate is now going to be whether Fed's going to start tapering or not. And they were just looking for a positive number. They just wanted to make sure that this wasn't like a negative number. Anything over zero would have done the job. In my opinion, I was expecting north of 250 to as high as 350,000 jobs, and we came in far, far lower. So very confusing, a very unusual type of report. but you'll notice the markets are reacted in a positive way with the Nasdaq jumping over 42 basis points pre-market. We got the S&P 500 up over 25 basis points and the Dow also up over 10 basis points, more towards the Nasdaq here. The gains are skewed a little bit more towards tech and growth, and that's primarily due to maybe, the market may be expecting a little bit of a postponement or some type of a delay in tapering. That could happen. Again, the real question, the real debate over the next month is really going to be whether the Fed's going to announce a tapering or not. And we already heard from Jerome Powell last FOMC meeting, and as he mentioned that all they're looking for is a reasonably good and a decent jobs report in order to announce tapering. So you guys decide, and the market's going to decide. Everyone's going to have their own opinion on whether is this going to cut it, or if the markets or if the Fed wants to see a better employment report. This is certainly not for interest rate. Again, we have to make the distinction between quantitative easing and quantitative tightening. Tapering is a process of quantitative easing. Raising rates is a process of quantitative tightening, right? So right now we're just pulling back on the quantitative easing that the Fed provided for the last 18 months, and we're just doing some tapering. As a result, we're pulling back on the bond purchases. So that's going to happen first, and then they're going to move on to actual interest rate hikes and some tightening in the future. So we're far away from that. The real question right now is going to be whether the Fed's going to taper based on this employment report or not. In my opinion, the chances are very, very high that we see some type of tapering announcement in November. I think this is a reasonable report. Of course, this is not the best by missing expectations, but this is also, you also have to consider that this is, this was actually the benchmark before the pandemic started, right? Before the pandemic, 194,000 jobs would have been a good jobs number, right, for the month. But since we are during the pandemic, this is of course a very disappointing number because of how many people are still unemployed in the U.S. So, it's all about perspective. So I think that's a reasonable report just considering where we are, and this could lead to an announcement in November for tapering. So this we already talked about. A short-term debt ceiling has been a bill has been passed for $480 billion that would increase a nation's debt ceiling to, I believe it was 24 point something trillion dollars, and that's going to put us up until December 3rd. That's going to be the new deadline day that we have to remember. So earlier was October 18. Now it's getting pushed back just about 2.5 months, because of this bill that's signed, and we get some time. We just bought ourselves some time with the debt ceiling, but of course eventually we will have to get around this to either raise the debt limit for good or just suspend that debt ceiling altogether. U.S. oil prices as measured by West Texas Intermediate, so WTI crude, on Friday morning inched closer to $80 a barrel. The last time WTI was this high was back in November 3rd, 2014, so more than 6 years ago. Natural gas prices were lower Friday, have reportedly hit record highs as Europe and Asia compete for available liquefied natural gas. So this is also going to put a little bit of pressure on inflation. Next week, October 13th, we get that inflation report. So that is also going to be very important for the markets moving forward. So average score, ISI reiterates Apple has outperformed. So this is also another upgrade on Apple. Yesterday, we got a market perform rating on Apple as well. So this is an outperform rating for the company. But Facebook also received an outperform rating from Bernstein. So they said in a note to clients on Friday that investors should buy the dip. So Facebook and Google and Apple are some of the stocks that we've actually been buying. So not too confident about this pre-market rally right now. Just a little bit cautious here. We did do a little bit of a buying yesterday. But all in all, the market may be pricing in some postponement or delay in the tapering just based on this report. Again, it's a little bit confusing, just this unusual report that we're trying to kind of dissect together. But we'll see what happens. I'm not too confident in this bullish rally, but we'll see what happens. We're still getting tagged at that 50 EMA. That's the level to watch for both the S&P and the Nasdaq. We're still not in the clear yet, as we've already talked about in our yesterday's market update. All right, let's take a look at some of the comments here. So green market today, we'll see. We'll find out what happens today, right? So the market is going to be closed on Monday. That's a great question. What is Monday? Is Monday some holiday? So Monday is October 11th. I don't know. I don't think it's a national holiday, is it? Let me see. Markets closed on Monday. Columbia Day, or is it? Dylan says, okay, markets are not closed. Markets are open. Okay, we'll find out. We'll find out. Not something that we have to look at right now, but we'll find out. Columbus Day. Okay, so is it Columbus Day? Somebody mentioned Columbia Day. I wasn't sure. So Columbus Day. Okay, might be. I'll take a look at that. So all right, let's see. What other comments? What other questions you guys have? So what do you guys think? Taper or no taper? Let me just do a quick poll. Will the Fed taper in November? Let's see. Let's see what you guys think. So, alright. Kyle, Caddy, we appreciate you organizing your day around us US markets while you're way overseas. Thanks for all the info every day. Thank you. I really appreciate that. Thank you. And I'm glad you enjoy all the information. And definitely here to help as much as I can. But yes, the market's definitely green here. Watching the 50 EMA. So right now, the 50 EMA, yesterday we got up to as high as 441 on the SPY, but we ended up closing well below that 50 EMA. So that was just a huge long wick on the candles. That does represent there was a lot of selling pressure coming in yesterday. So towards the end of the day, we saw a lot of momentum to the downside, and this right here, just a complete U-turn. We pushed up and then we got rejected, came back down. Same with the NASDAQ, almost an identical pattern here, and same with the Dow Jones, almost an identical pattern. We pushed up and then, sold off once again, back down to 347. So watching that 50 EMA very closely. For SPY, that's going to be sitting roughly at 439, and for QQQs, it's going to be sitting roughly at that 366 levels. So perfectly we got up, and then a long wick on the QQQs as well, getting rejected at that level and then selling off even further. So Kenny, what do you think about the upcoming CPI report? I'm not too confident. Energy prices with the rate at which they're going, hitting 7-year high on crude and then hitting 3-year high on Brent. I'm a little concerned about the inflation numbers coming out next week. Only because as energy prices move up, they do raise expectations for inflation in general. I don't want the Fed to be in a situation where the labor market's strong. So I don't want the Fed to be in a situation, because this is what would happen if they announce tapering, and they've already mentioned that they are going to raise rates after the tapering is complete. So obviously they're not going to do both of them at the same time. They're not going to taper and raise rates at the same time. Jerome Powell's already talked about this. So I don't want them to be in a situation where inflation gets a little bit too high, where the only way to combat inflation would be through interest rate hikes. Then they'll have to rush through the process of tapering in order to raise rates, because again, doing them simultaneously kind of beats the whole purpose of quantitative easing and tightening at the same time. So in order for them to raise rates, they need to get through with the tapering process first. And I don't want inflation to put pressure on the Fed to raise rates, because then they'll have to accelerate the tapering process, and then of course everything will get screwed up from the market standpoint. So inflation, in my opinion, needs to be kind of like in control, and with energy prices with where they are, I'm not too confident. Of course, I don't expect hyperinflation situation, but it's going to be interesting to watch where that inflation report is going to be next week. And we'll keep a close eye. Again, 8:30 a.m. that's going to come out October 13th, the CPI numbers, and then PPI numbers also going to come out sometime next week. So Rita, I have the SPY and the QQQ on the daily time frame. So right here, you'll see all the time frames listed at the top panel for trading view. So we got 1 second, 5 second, 1 minute, 5 minute, 30 minute. Right now I'm on the daily for SPY and QQQs. So rates will be hiked probably Q4 of next year. I think that's a reasonable outlook. I think next year, a lot of FOMC members have it by middle of next year. So after the tapering process, they see interest rates, the Fed funds rate at roughly 30 basis points. My expectation is more towards early 2023. So like Q1 of 2023 is where I personally see interest rates going up. But again, we'll find out as more and more data comes out in the markets as well. All right, let's see. When Baba gets to 190, let's see. Alibaba has been doing really well, right? Yesterday was up over 8%. Today pre-market we're up another 2.6%, back up to 160. So from lows of 137, this has been a nice, 16-17% jump for Alibaba, and now we're starting to see that push higher from this falling wedge pattern and just this entire downtrend, right? So the real question is the bottom in? Is the bottom in for Alibaba, or if we're gonna see another one of those, potentially back down to 140, 130s, or even making these lower lows once again, because this has happened, time and time again. We saw a rally of 27% here. We saw a rally of nice 12% here. We saw a rally of 13% over here. So it's happened time and time again, but we have seen those lower lows. So the real question really is the bottom in, or if there's any more potential downside here yet to come for the company. So yeah, we'll keep a close eye at 143 support here for Alibaba. And of course, resistance is going to stay put at that 50 EMA all the way as high as this resistance at $180 a share for the company. So two resistance levels to watch: 50 EMA all the way as 180. Support is going to stay put at 143 all the way as well as $130 a share. All right, let's see. So morning from New Zealand. Good morning, good morning. Thank you so much for joining in. And we got a split vote. 52% say yes and 48% no for a taper announcement in November. I'm gonna vote yes because I do think they will. But of course, only time will tell. All right, let's take a look at Zillow. So Zillow also had a really nice day yesterday, so up over 6%. This right here is kind of like a falling wedge pattern also for Zillow, so we're making consistent lower highs and lower lows. And right now we're just perfectly filling that gap. $85.60 is that support level to watch. And right now, of course, we're pushing higher. If we get that breakout over that 50 EMA, sitting roughly at $96, and I wouldn't be surprised to see a retest of 103. That right there is going to be that next target and that next resistance to keep in mind for Zillow right there. So that would be the next target if we get that breakout over that 50 EMA, but a nice move to the upside yesterday of over 6% for the stock as well. Have you been in the loop for CEI drama? I did read up on the company, Camber Energy, but I have not really done any research on it at all. So I know it was like a lot back and forth. Did read up on it a little bit, but it was down over 83% in just a couple of days, and now it's just back up to over 200%. So definitely a lot of volatility for the stock. Obviously, if you guys know me, this is not my cup of tea, but definitely a lot of volatility. It's very, very small cap in general, 185 million. So definitely on the news the last few days. All right, let's just open up our charts very quickly, and then we'll also look at VIX. VIX should be down. I think we had an alert go off at close to 18 levels when the volatility was coming down as the markets continue to push higher. And we'll also keep a close eye on this select sector index to see which sectors actually do outperform today. So VIX coming down over 3% here, trading as low as 18.8. Definitely breaking down below 20 levels, and this has been the pattern for the volatility time and time again. We've seen that spike, we've seen that breakdown, we've seen that spike, we've seen the VIX come back down. So watching 15 levels next. This right here is going to be that next level to watch for the volatility, and of course 20 levels near term is going to be that next resistance level. Yields are also higher, so up over 44 basis points, back up to 1.58. So definitely pushing higher. Watching 1.75 next. As yields continue to push higher, and TLT is now starting to break down even further. So you'll notice that TLT actually broke down. This is actually we covered not yesterday, but the day before that. We talked about this ETF and how this right here is a support at 143, 144. And if you get that breakdown for the TLT ETF pre-market, you'll notice with it down another 37 basis points, the yields will obviously, that move in an inverse relation with the prices are going to push higher. So 1.75 watching next, and as this gets higher, this is going to be making headlines once again as 10-year yields start to creep up to 1.6, 1.7, 1.8 levels. You'll read about this a lot more because it's going to start competing with stocks, and we may see some type of flight to quality away from equities over to bonds once again because the yields become very favorable and attractive. So we'll keep a close eye on this. Definitely have my alerts set up for this as well. So just keep a close eye on the yields as well. All right, so let's just open up our chart very quickly. We got about 10 seconds left for the markets to open up, and we're gonna switch over to the actual indices here. All right, so SoFi, we had an alert go off on SoFi, and S&P just crossing over 4409. All right, there we go. We just opened right there. All right, let's see how we do today. So Canadian Thanksgiving is also, is it next week, or is it also in November? Should be in November, right? Or is it in October? Is it a month earlier? So Pedro, PubMatic. Let's take a quick look on PubMatic, PUBM. So PubMatic definitely trading at a very, very reasonable support here. Profitable company. We've talked about it several times. This is about a very, very low risk, high reward potential on PubMatic right now because of how low it's gotten. Right, it's definitely come down over 69-70% from its all-time highs. Still trades at a reasonably high price to earnings on a forward basis, but all the other valuation multiples are low for the company. So I'm definitely interested to learn more about their earnings and how well the company is growing its business and the customers and whatnot to really be more confident in PubMatic right now. I do understand the fundamentals are strong, but I still don't have that conviction in the company just yet. I want the company to really provide us some strong guidance, some strong numbers in the future earnings for me to really establish a position in this moving forward. But the price is really at a very, very attractive level here, just considering the other valuation multiples. But based on the forward EPS, still trades at roughly 45, 48 price to earnings metric. So Coinbase at 254, we got Alibaba crossing 160 here, so definitely pushing higher. Let's take a look at Tesla. So Super Donkey, thank you so much for that donation. So we are as high as 795, still struggling here. $800 is going to be that resistance level to watch. I mean, I can't put more emphasis on that price point because you'll notice that time and time again we're just struggling to break out at that level. So there is a significant supply for for Tesla at $800 a share. Right, for Tesla, that's going to be the level to watch very, very closely because for the last, 2 weeks, so Google breaking out over 2802, 1, 2, 3, 4, 5, 6, 7, 8, 9, for the last 10 days. So that's 2 weeks of trading, so 5 days per week. We're struggling to break out over 800. We're in fact not even closing over $800 a share. Right, yesterday was about as close to as what we got at 793. And this right here was a close at 791. So if we get a close above $800, in my opinion, that would be a very bullish sign for Tesla. But we need to see that. We're just getting rejected at that level, and 780 is going to be the support all the way to 750. If the volume stays high, if the volume comes in today, right now we're already at 1 million shares traded, then I wouldn't be surprised to see a breakout over $800 for Tesla. Strong delivery numbers we broke down earlier, 240,000 vehicle deliveries in the third quarter. So that's also very, very strong for the company. It's potentially on track to doing 1 million deliveries in 2021. So we'll continue to monitor this. And of course, 50% growth is what they've expected on a compounded basis for the next 5 years as well. So that is also a very, very strong number for Tesla. So fundamentally, again, Tesla is also one of those stocks, kind of like Alibaba and Palantir. It's very polarizing, whether you're bullish, you're either very bullish on the company or you're not, or you're too bearish. But in my opinion, I'm super bullish on Tesla. I do believe in the long-term potential. It does trade at a rich valuation, but that's the risk that I'm willing to take in Tesla in general. But $800 is going to be that next resistance level to keep in mind. All right, so the markets, let's take a look. Starting to pull back a little bit, giving up on some of the gains here. The S&P is about flat. So is the NASDAQ, just over 15 basis points, and the Dow is just turning negative here on the day. And like I said, I'm not too confident in the markets just pricing in this jobs report right now. So I do feel that we could see some more momentum to the downside here, and as a result, getting a rejection on the S&P and the NASDAQ as well from that 50 exponential moving average because of yesterday's long wick that we saw. So starting off with the red candle, we'll see what happens the remainder of today. And if the VIX spikes back up to 20 levels, that's going to be interesting. All right, so on the day, we got energy still up because oil prices are pushing higher. Then we got Bitcoin down 1.3%. We got materials, discretionaries. Everything else is pretty much about as flat as it can get, except for energy that still remains higher. Still pushes up. Let's take a look at our energy watch list. So again, Chevron, Exxon up over 1% each. Let's see. So there we go. Chevron has had a really nice rally in the last 3 weeks here, coming in from lows of $93. It's jumped over 15%, and same exact pattern for ExxonMobil, also pushing higher from lows of $52. Up nicely over 18% because of the jump in oil prices. Let's take a look at our banking watch list. So we only have MasterCard, Visa, and Deutsche Bank green. Again, quite unusual because the yields are higher. But the banks aren't quite following up with that. And we got Citigroup, Goldman Sachs, JP Morgan, Bank of America, Morgan Stanley, all pretty much flat or slightly down in the red so far on the day. Takedown Tractor event would be a good time to re-enter. So Maxim, it's a great question. Let's take a quick look on Takedown Tractor. So this is a stock that's been doing really well. Almost got up to as 171. Breaking past our resistance and our target of 165. So this right here is going to be that support level now at 165 for the stock. So if you're looking for a re-entry on the company, I would watch 165 as that next support level to keep in mind, because this is a nice breakout from the 50 EMA, nice breakout from this lower highs as well. So what we really need to see is some type of a retest 165, revalidation of that support as we have done in the past. Perfect validation of 165, could be even as low as this 161-ish level, but I'll keep that intact for now. To revalidate that level and then make the next leg up higher, potentially break out to over 177, break out over 200 simple moving average as well for the company. So keep a close eye at 165 as that next support level. So yeah, all red now. This feels really weak because it wasn't quite organic. Every time we have kind of like this binary events, whether Jerome Powell is talking or we've got inflation coming out or any type of those events, to me they feel like very artificially infused movements and not organic at all. Like there's no real breath behind it. It's mostly like algorithms kind of firing off based on one event or whatever someone said or what happened, and they're just like selling or buying some positions based on that. It's not like actual real volume of people making decisions. It's more like instant, and that's what I don't like about the markets, just based on these binary events. That's why like when markets go up, when Jerome Powell's talking, to me that's like one of the worst things, because I don't know, just because somebody's saying something, the markets continue to rally and then the next day kind of fades over and then volume fades and it just kind of rolls over. To me it's like, better buying opportunities when the markets are down. All right, let's take a look at Shopify. So Shopify has seen a little bit of a recovery here back from 1300 levels. So we got a retest of that 200 simple moving average. This right here was a support level that we were talking about for a really long time. So again, we broke down because the valuation was high for the company. We came down to 1300, almost 1281. And since then, we've seen a nice rally of 11%, and now we're getting rejected at that 1445 level once again. So this right here is going to be a resistance level at the 50 EMA for Shopify. We talked about it in our yesterday's market update, and right now we're seeing a little bit of a selling pressure on the day, meaning that it's a green day, but a red candle represents that intraday. We're seeing a little bit of a selling pressure here. Let's take a look at CRISPR. So, all right, let's take a look at here. Big tip. So down about 4.6% right now. $95 is going to be that next support level to watch. Mark, we're starting to break down below this symmetrical triangle, and $112 is that resistance for CRISPR, and $95 is going to be that support level. I mean, it would be a really nice deal. 10-year deal is almost crossing 1.6 here. So definitely a big jump in the yields, and the market's somewhat red. Pretty much flat so far. The Dow is down about 17, the Nasdaq is down 13, S&P is pretty flat, but the yield is definitely pushing higher. $95 is going to be that next support for CRISPR Therapeutics. Very important level to watch closely. Let's take a look at a firm. So firm holdings, 137, 138 is that resistance and that target. So you'll notice that we have just been getting rejected at that level time and time again. So this right here has been a resistance for the company. A couple days we've tested that level and we're just fighting that resistance. Even though the volume was good, we didn't quite get a breakout over that level. So I would just watch that $137, $130 as that next resistance to watch for a firm. And support level is going to stay put at close to $103 a share for a firm. All right, so I got to end the vote. We got 53% yes, 47% no. So we got a split vote there pretty much for Fed taper in November based on the jobs report today. I think it was a reasonable report. Obviously nothing great, but this is also like the highs from the pre-pandemic levels. So definitely this is normal in a pre-pandemic world. Obviously, in the world that we're right now, it's not, because we're expecting 500,000 jobs. We came in much lower, but I still expect this to be like a reasonably good number for the Fed to announce some type of tapering in November. Let's take a look at Tattooed Chef. No one seems to talk about it anymore. We did talk about it. We talk about it almost on every live stream, but This stock I've already mentioned, just based on the fundamentals and the management and the outlook that the company provided us, is quite off. Meaning, they see $1 billion in revenue by 2025, EBITDA of $200 million. That's a pretty aggressive estimate, just considering where the company is and how they missed their current guidance for current year. So $19 is going to be that resistance level. So S&P 4407. Wow, so yeah, that's what I thought. It's getting a little bit of reversal back up. But Tattooed Chef, $19 is going to be that next resistance. $15.50 is going to be that support level to watch. This could be a nice swing trade if it does come down. If it does come down to lows of that $15.50 levels, $15.75 support level, could be a nice swing trade. But as a longer term fundamental play, this is not for me. Just considering unless the fundamentals actually improve and the company is on the right track. But of course, the dilution part also kind of turned me off a little bit. That was a big red flag for the company in general, just based on how much dilution they've done over the last 2 to 3 years, from 25 million to well over 82 million shares. It's like 4x in dilution. So even if the stock goes up 4x and they do 4 times dilution, your profit is 0, right? That's kind of like one of the biggest red flags for a company. It's kind of like a hidden drawback of what companies can potentially do. So are you invested in any oil companies? I am not invested in any oil companies. I do like renewable energy companies, but nothing related to oil, like traditional oil, not so much. But there we go. We're seeing a little bit of buyers step in once again. Nasdaq up over 18 basis points. We got the Dow up another 10. We got the S&P up over 21 basis points here. Banking sector is now starting to turn green here, with Citigroup and Goldman Sachs, JP Morgan, only the ones that are in the red, pretty much flat so far. There we go. JP also turning back green. Then we got Bank of America, Wells Fargo, we got Deutsche Bank, and of course Morgan Stanley, all turning green on the day. And of course, coming off of the yields move, just a quick look on the yields here, and we are almost at 1 point. We did actually breach 1.6. The high for the day is 1.601. So definitely on the move here. The yields are pushing higher. Bitcoin still over 54,000. So 53,000 is gonna be that next support level to keep in mind. And resistance is going to stay put at close to 58,300. Ethereum, there we go. S&P at 4406 is there. Ethereum resistance is going to be at 3680 level. So right there, that consolidation pattern. We're just like struggling to break out over that level, and support level is going to stay put at close to 3,500. So the markets will be closed on Monday. Yes, I'll just update everyone on Discord whenever I find out. Right now I can't pull it up, but I'll just update right after the live stream, because if the markets are going to be closed, then we have to make sure that we make any trades that you have to make, any options that you have open, you want to make sure that you are taking care of those before Tuesday when the market opens next. Since Monday would be a holiday, I just have to double check and confirm. Alright, so let's take a look at the markets here. So in our main watch list, we got Astrospace up over 4%, back up to $8 a share. Upwork is also up over 2.4%, back up to $52. Alibaba, as we already discussed, up over 1.8%, almost as high as 159. Shopify pushing higher. Fiverr back up to 185, up over 1.8%. Neo is up 36.45, so that's good, pushing up over 1.25%. Zillow we already went over. That was like the first stock that we went over, so you're more than welcome to kind of go back and watch that analysis and then jump over to the live stream here. Pinterest also pushing higher, 1.3%, back up to $50.50. This is a stock that I am bullish on. There is some nice positive divergence forming for the stock. This is a very similar pattern that we saw for Southwest. We saw this for SoFi. We saw this for AMD. We saw this for a lot of stocks that ended up breaking out to the upside. So $48.50 is going to be a really nice support level, but resistance right now is going to be those lower highs, kind of aligned with this red line you guys see on the chart. And of course, I could see a breakout back up to over $60, $65 a share for the company as well. All right, so guys, I'll check on my own, and I will let everybody know if the market is closed or not. We're just having a debate on whether the market is closed or not on Monday. I'll check and I'll let everybody know on our Discord. But we got Trade Desk also for 84, 89 basis points here. We got Facebook and Visa also slightly up over 90, 95 basis points. I'm definitely looking for Facebook here. Facebook 325, $325. Nice support here for Facebook. We kind of did some buying on Facebook as well. Very small position. We'll consider kind of dollar cost average in this company as well. The RSI is down, quite a bit, 36, very oversold. The MACD is also down, so definitely does represent some type of a bullish sentiment here. And if we get that bullish crossover, I wouldn't be surprised to see some more, rally here back up to 350s for Facebook as well. Enphase is up slightly, barely. Then we got Activision Blizzard, Unity Software, Amazon slightly pushing higher back up to 33.16. So back up to that 3,300 level. So low for the day 33.02, right? That's the low for the day. Our support was at 33.01. Wow, you guys are just having fun, aren't you? Just like going back and forth with the markets being open or closed on Monday. But 33.01, that was our support, and the low for the day 33.02, right? Square, we have 248, just about down 10 basis points here. You guys are hilarious. But resistance 251. That's the 50 EMA. We're just getting tagged to that level, right? 251 is going to be the level to watch. All right, what other stocks do you guys want me to go over? I think that would make you guys talk about something else. What other stocks can we go over, right? Just what stocks can we analyze? Let's just go over some stocks here. All right, Mercado Libre definitely coming down. MELI, it's definitely been coming down, right? This is on the watch list. We had an inverse head and shoulders pattern here, then a breakout nicely back up to all-time highs at over $2,000. And since then, we've seen a little bit of a pullback here. So definitely watching this stock support level. I would keep a close eye at this 1479, 1480 levels for the company. Let's take a look at Boeing. Boeing we haven't gone over in a long time. So just consolidating sideways in this range. We got a perfect validation of that 210. Watching 234 as that next resistance, although we are still struggling to break out over that 200 simple moving average. So CrowdStrike, CRWD, it has come down, but 250 is going to be that next resistance level to watch, right? So right now we are struggling. CrowdStrike also trades at a very rich valuation here. So obviously not considering buying at these levels, but just watching it from a technical standpoint. This right here was kind of like the higher lows that we got rejected at, and then we broke down for the company. So this right here was a breakdown, rejection. We're just consolidating sideways. 250 resistance, 227 is going to be that next support level to watch for the company. Let's take a look at Enphase. So Enphase 150 is going to be that support level and that entry for us. We did breach all the way down to 142, and we did dollar cost average as well a little bit more. But right now we're just struggling at that 50 EMA, so we're roughly at 160s. But if it does get a retest of 150 right here, I would be more interested in kind of dollar cost averaging more on this company even further. So let's take a look at Micron. Micron also consolidating sideways, not really doing anything. So $69, $70 is going to be that support. $74 is going to be that resistance. We're just consolidating sideways in that range. And every time we've come down to that level, we've seen a decent 7 to 8% rally here for Micron as well. It trades at a very low valuation, so there's not a lot of risk for Micron in my opinion. But of course, we also have to consider what type of growth can we see for the company. Let's take a look at orange juice, CFDs right here. They actually broke down below that 50 EMA, so they have been coming down, right? So, there wasn't significant negative divergence. So obviously, higher highs for orange juice and lower highs being formed, and now we're seeing a breakdown below that 50 EMA. So that next support to watch is going to be 120. Would love to buy orange juice at 120 here if it comes down to that levels. Zillow we already went over, but very quickly going over that once again. Getting tagged at that 50 EMA, so that's a resistance that we just talked about literally before the markets opened. That right there is going to be that resistance level to watch at $96, all the way as $103. Right now we are seeing a little bit of a push higher from this falling wedge pattern, but the volume needs to be higher. Today seems to be like a very low volume day so far. So watch that $96 as that next resistance. Palantir consolidating between $21, $23, all the way as $25.75. So support level near term is going to be $23, and resistance is going to stay put at that 50 EMA. Anything that you see inside that red circles, two of them that I have are going to be resistance levels. First one aligned with that two moving averages, all the way as $29 for the company. Let's take a look at Skills. So Skills has just been doing very poorly, unfortunately. So it's just been coming down aggressively here. Again, fundamentals. It's a rich valuation for the company, and fundamentally, I haven't really looked into the revenue growth and whatnot. But I do know that they have been doing a lot of dilution as part of their strategy, and as a result, the stock prices can come down quite a bit. So it's hard for me to really analyze a stock that's hitting a 52-week low. The pattern has been very, very strong to the downside here. So resistance, I guess, is going to be at $9.45, but it's very difficult. It's a hard pattern for me to analyze just from a technical standpoint. I would need to really take a look at the fundamentals of this company to try to understand, if there's any potential for a recovery here for the company or not, for Skills. So that's that. INTC also consolidating, not really making any moves here, just in between this range, between $52 all the way to $55. So that right there is going to be a lot of consolidation for Intel right now. Got a decent yield and has got really strong plans for foundry business, investing a lot in the US. So that is gonna be the real question mark for Intel, and whether we're going to see a recovery back up to all-time highs and potential upside here, or TSMC is going to be strong enough to stop Intel from diversifying and actually expanding into that business. Let's take a look at SoFi. So SoFi, just over that 50 EMA, we're still in this uptrending channel, making higher highs and higher lows. So this right here is still going to be that pattern for SoFi, and 1675 is going to be that resistance level. 50 EMA, very, very tight channel right now, is going to be that support level, and you'll notice that we're still hovering over that support level. And this is the first time we're actually doing this in a very long time. We've just been getting rejected at that 50 EMA here, a lot of rejection, then we got a breakout, another breakdown here, rejection, and right now we're just hovering over that 50 EMA again for SoFi. So that's a level to validate a lot for the company. So, all right, let's take a look at, SoFi we went over, CRISPR Therapeutics we went over, Pinterest we went over, Micron we went over. Let's take a look at Airbnb. So Airbnb has a support at close to 170. So we did break down here during the sell-off for the markets, and we recovered, and right now low for the day 170.10, and the support is at 170.11, right? This right here is going to be that support level to watch, and that next resistance is going to be 183. That's going to be my next target for the company. And also, if you notice this higher lows for the company, we have just been perfectly validating these higher lows right here. That's going to be the ascending support for Airbnb. In fact, we can also actually identify some type of an uptrending channel right here. So if you mark this, you'll notice how perfectly we've just been pushing higher, making higher highs and higher lows. So the next target is going to be 183 for Airbnb. So CRISPR, $96 is the one that I'm watching for CRISPR Therapeutics. Down about 5% here, but actually $95 right here is that support level to watch for the company. Previous support that we perfectly validated, and then we saw a rally for CRISPR, north of 72%. A lot of the biotech stocks, including like therapeutics and pharmaceutical stocks like CRISPR and even Vertex, have just been selling off. I mean, this has just not been the year for these companies. Like Vertex is down year to date over 23%, right? CRISPR, let's take a quick look. CRISPR may be up, I'm not sure. Year to date down over 35%. So definitely, a lot of weakness for both CRISPR and Vertex. In fact, they're working together on sickle cell disease and type 1 diabetes as well. And I think Vertex has invested close to $900 million in that project. Bullish on Vertex a lot. CRISPR also trades at a very low valuation, but would definitely need to do some more research on this company based on the revenue. But they haven't been consistent with that revenue growth or that earnings growth as well. But I'll keep a close eye. But of course, companies like Moderna and BioNTech have done really well year to date. Still up over 196-200% year to date for the company. Although we have seen a little bit of profit taking now and starting to come back down. So watching that 200 SMA close to 231 for Moderna and BioNTech. That 200 SMA sits at roughly $203, and that's also going to be aligned with that higher low inside this ascending triangle for the company. For NEO, we've already gone over. The resistance here is going to be 38 all the way to $40. We are up on the day. The real question is whether we're going to see NEO kind of regain momentum, regain control over that 50 EMA. And you'll notice that NEO has been very correlated with the Chinese stocks in general, regardless of how the fundamentals are doing for the company, for the business. And you'll notice that, every time we see a rally in Alibaba, JD.com, Baidu, Tencent, all these companies, a lot of the EV stocks in China like NEO, XPeng, Li Auto do really well. So that's been kind of like the correlation for NEO. It's not kind of trading on its own fundamentals, but rather what's happening in China. And as the situation improves, hopefully over there, then we could see a potential rally for NEO as well. So which stocks have good option premiums to sell covered calls? Was thinking about buying Lucid and sell covered calls. Great question, but I can't really look at the premiums of options chains right now. You'll have to kind of see for individual stocks what type of returns you get by selling covered calls for the 100 shares that you will probably have for those companies, and whether you can get a reasonable return on those shares that you have. So you would have to just go through the options chain and just look at those different prices. Tesla coming down to 784, unfortunately. So definitely pulling back here on the day. And let's take a look at the markets. How are the markets doing? Flat. So the Nasdaq's flat, the S&P's flat, and the Dow Jones is flat. Pretty much about as flat as we can get. So I think it's a kind of like a result of a lot of indecision in the markets right now, because just like myself, that I'm trying to think about it in terms of yourself, right? What do you think? The market, is it going to taper or is it not going to taper, right? We just did a very quick poll and we got like a 50%, 52% people said that yes, Fed's going to taper. 48% people said that Fed's not going to taper. Now just put that in perspective of the market. It's probably the same thing, right? People are just trying to decide whether this jobs number is going to result into a taper or not. And as a result, there's indecision and there's just a lot of back and forth for the markets. So I think it's very reasonable for the markets to stay a little bit indecisive until after we see the inflation report, and then of course whatever the Fed says will actually be the true fact and what we really decide to do. But inflation is going to be the one to watch very closely next week. So Digital Turbine has had a really strong run. There we go. So up another 2% here. $81 is my next target on the stock. This right here is going to be that next resistance to keep in mind. This stock was selling off for absolutely no reason back in the day. When it was down from 67 down about 29%. 29% down to $47. And since then, I mean, it's gone up over 69, almost 73%. Gain all the way to highs of $81. So strong rally here. Congratulations to everyone who actually invested or traded Digital Turbine. This stock actually does not disappoint, because after earnings it'll come down a little bit for the short time, but after earnings almost every time in a matter of a few weeks to a few months, this stock ends up going up. And this has worked out. I think I did some analysis for the last like 2 to 3 years. And during earnings, this is always the play for Digital Turbine. It did take us longer than expected this time around. We did drop over 28%, so definitely there was a lot of volatility, but we did end up rallying, back up to $81, $82, and got a couple of breakouts as well. So strong move for Digital Turbine here. Watching that next resistance at 81.50 for the stock. All right, so Bitcoin really pulling back here. So let's take a look. So 54,139. So a little bit of sellers kind of stepping in. That's a longer wick on the chart here. So Bitcoin down. All the other sectors are pretty much flat, with the 10-year yields pushing higher. Energy sector also pushing up. Where are the yields? The yields are 1.605. Take a look at this. Here we go again. It's going to be a March, April, May 2.0, when the yields were all the way to highs of 1.775, 1.75, around those levels. So definitely pushing higher, and this could be the market pricing in some tapering, because as I said, the yields are going to dictate where the markets go remainder of this year. In Q4, the 10-year yields are perhaps the most important benchmark for us to follow up with, because as tapering happens, when the Fed announces, if or when that happens, that is going to, and I mentioned I'm really curious to find out how the 10-year yields react to this, because tapering means pulling back on the bond purchases, means bond prices will sell off, which is what's happening here. This is the bond prices ETF, TLT. and we are selling off down about 6.6% in the last 3 weeks, down to 142 now. So as this happens, yields push higher, which is the 10-year yields here, up to 1.6. So they're going to really dictate where the markets end up trading at remainder of this year. I always use a log scale. I almost never use linear. Always use a log scale. Maybe on some charts I may not have it active, but I'm definitely on the shorter time frames it doesn't quite matter. But when I'm using like longer time frames, monthly, weeklies, then I want to make sure that I have the log chart. But thanks for reminding me. I wanted to double check. But these are like shorter time frame charts anyway. Like this one is 5 minute. This one is also 5 minutes. So you'll notice that it's not much of a difference if I uncheck or check it. Just a slight variation. But longer time frames is what I really use logarithmic charts on. There we go. A lot of buying pressure stepping in once again for the markets. Just a lot of indecision. Just a lot of back and forth here on the day. But anyway, thank you so much, you guys, for joining in. I'm going to spend some time with our Discord members and our Patreon members, send some alerts and updates also on the markets. But thank you so much for being here. I really do appreciate you guys' support. A lot of indecision in the markets. Of course, job numbers coming in much lower than expected. But we'll find out next week where inflation sits, and of course in November, what the Fed decides to do. In my opinion, wouldn't be surprised to finally get that tapering news and announcement from the Fed, and then really curious to find out how the yields behave to that announcement. So thank you so much for being here. I really do appreciate you guys' support. Have a great weekend. Take care. Get some rest. And of course, make sure that you subscribe and like the video. And if you want to get access to our buy and sell alerts, the Patreon link is also going to be down in the description below. So thank you so much for joining. Really appreciate it. Happy investing. Take care, and I'll see you guys in the next video.